Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC accountancy online classes. In the previous class we have discussed about fifth problem and fifth problem, Raju, Ravi and Rupa, right? Yes, now let us move on to the sixth problem. I will read out the problem and let us solve the problem. Puneet, Pankaj and Prakash are partners in a business sharing profits and losses in the ratio of 2:1 respectively. Their balance sheet as on 31st March 2017 was as follows. Liabilities side sundry creditors, capital balance is given, reserve fund is given, should be paid to the deceased partner, isn't it? His share should be paid irrespective of the date of death. Cash at bank, stock, sundry debtors, investments, furniture, buildings. Mr. Prakash died. Not this Prakash, someone else maybe, isn't it? Otherwise I wouldn't have been standing in front of you. Prakash died on 30th September 2017. See friends, year was started on 1st April 2017. 31st March means 1st April it will be 1st April and the partner expired on 30th September. So a gap of 6 months. There is a gap of 6 months. So we have to calculate current year's anything to be payable should be for 6 months. Correct. Deed provided the following, that the deceased partner will be entitled to his share of profit up to the date of death, calculated on the basis of previous year's profit. So we have to calculate profit up to the date of death. Previous year's profit is given over there. So till the date of death we have to calculate for 6 months and his share should be given. He will be entitled to his share of goodwill of the firm calculated on the basis of 3 years purchase of average profits of the last 4 years. The profits for the last 4 years, 4 financial years are given below. 13, 14, 14, 15, 15, 16 and 16, 17 are given. So let us, we have to calculate goodwill here. The drawings of the deceased partner up to the date of his death amounted to rupees 10,000. So should be entered on the debit side. Interest on capital is to be allowed at 12% per annum till the date of death, remember. Show Mr. Prakash's capital account, right? So we have to prepare capital account. Before that, let us prepare, that is a working note. Note number 1, calculation of goodwill. Calculation of goodwill to be payable to the deceased partner. To be payable to the deceased partner. 3 years purchase of the last average profits of last 4 years, right? So goodwill is equal to, right here, goodwill is equal to 3 years purchase into average profits of last 4 years. Last 4 years. So here profit in rupees, let us calculate here, starts from 13, 14, 14, 15, isn't it? 2013, 14, 14, 15, 15, 16 and 16, 17. So write the profits. 80, 50, 40, 30. 80, 50, 40 and 30. it will become 2 lakh. Therefore, total profits, average profits is equal to total profits divided by number of years. Number of years is equal to 2 lakh divided by 4 years, right? 1, 2, 3, 4. So, divided by 4, rupees 50,000. Therefore, goodwill is equal to rupees 50,000 into how many times 3 years purchase is equal to rupees 1,50,000. Am I correct? This is the goodwill of the firm. Remember, this is the goodwill of the firm. Now we have to calculate the share of the retiring that's a deceased partner, that is 1,50,000. Therefore, share of Prakash is equal to 1,50,000 total goodwill of the firm into his share. How much was his share? 2:1. Prakash, the last partner. So 1/5. 1/5 is equal to rupees 30,000. Rupees 30,000. Isn't it? Yes. Goodwill calculation over. Anything else to be calculated? Share of goodwill is over. Share of profit up to the date of death calculated on the basis of previous year's profit. That can be easily calculated because previous year's profit is given as 30,000. So into his share into till the date of death. Correct. That's what we have to do here. So let us open. What did they ask? They asked us to prepare capital account. So Prakash's capital account. Prakash's capital account. Capital account. Yes. Let us start with the capital balance by balance brought down. By balance brought down. How much it is? 40,000. Write the column headings. Debit, credit. Particulars JF. Amount in rupees. Isn't it? Provide it properly. Yes, by balance brought down. Then reserve fund. Reserve fund. Show the calculation here itself. 5,000 reserve fund in the balance sheet. His share is 1/5. So it will be, sorry, it is 50,000. I'm not. It is not 5,000. 50,000 into 1/5. So it will be 10,000, right? Yes. 10,000. Then goodwill is there. Goodwill account we have already calculated. Goodwill. Write note number 1. Note number 1, 30,000. 30,000. Then comes profit and loss suspense account. Current year profit. Profit and loss suspense account. Current year profit. Show the calculations. 30,000. Correct. Current year profit they told 30,000 into 2 months, 6 months, right? Yes, 6 months, 6/12 into his share 1/5. Calculate, simplify it. It will come to 3,000. 3,000, right? Then interest on capital account. Interest on capital account Interest on capital account, how much? 40,000 into 12% for how many months? 6 months. 6 by 12. So it will be 2,400. 2,400. That's all. There is a drawings, isn't it? To drawings account. Is it capital account? So you can write to bank account. Drawings. To bank account. Drawings. Drawings, isn't it? How much? What is the amount of drawings? 10,000, right? Yes. 10,000. That's all. Close the account. Close the account. Find out the difference. Transfer it to his executor's account. Prakash's executor's account. So, total will be 85,400. 85,400. Write the same total on the other side. Find out the difference now. It will be 75,400 if I am not wrong. Yes. So, write to Prakash's executor's account. Executor's account transferred balancing figure. Balancing figure. Let's solve. The problem is solved. So that is how you have to solve it. Now let me move on to the next problem, bit complicated one. That I think a toughest problem out of all the problems we are solving here. 10 problems are given in your question bank. Out of that, this is the most critical one. So we have to prepare working note for that. Let us prepare working note first. Then we will move on to solve it, isn't it? I will do changes here itself. I think we have to prepare executor's account here. Next problem. Yes, get ready. Refer the problem. Yes, page number 63. Page number 63, problem number 7. I'll read out the problem and let us solve the problem. Aarti, Bharti and HEMA are partners, sharing profits in the ratio of 3:2:1, and their balance sheet as on 31st March 2017 stood as follows. Bills payable, creditors, doesn't matter, no issues with us, isn't it? Reserve fund, of course, that should be taken, and share of the retiring deceased partner should be given, isn't it? Without considering the date of death. Then capital balances given Aarti, Bharati and HEMA. Buildings, cash in hand, bank, debtors, bills receivable, stock, investment, nothing to do. Bharati died on 1st June 2017, and according to the deed of the said partnership, her executors are entitled to be paid as under. The capital to her credit at the time of her death and interest thereon at 10% per annum. 10% per annum. So what we have to do is capital should be given to her. We have to prepare, they told us to prepare Bharati's executor's account. So by Bharati's capital account starting point, isn't it? Then interest on interest on capital we have to calculate at 10% per annum. When she has expired, Bharati died on 1st June. Year started on 1st April, correct? So June means, 1st June means you have to leave June. She was not there during June at all. So she was there only for 2 months, April and May. So anything to be calculated for the current year, you should calculate it only for 2 months. Am I correct? Yes, then her proportionate share of reserve fund, of course, reserve fund is there, we have to give her share without calculating till the date of death, without considering the date of death, isn't it? Her share of profits for the intervening period. What do you mean by intervening period? Maybe a question for 1 mark or 2 mark in your board exam. What is intervening period? Intervening period is the period from the date of last balance sheet till the date of death of the partner. Suppose your accounting year starts on 1st April 2000, let us take 2018, and the partner expired on 30th September 2018, then the 6 months period gap is there, right? Partner expired on 30th September and accounting year started on 1st April 2018. So there is a gap of April to September, 6 months. This 6 months period is nothing but intervening period. This is called intervening period. Clear? So intervening period is nothing but the period from the last balance sheet till the date of death of a partner is called intervening period. So make sure of it. Maybe a question for 1 or 2 marks. It is there in your 1 or 2 marks. That is a theory question is there in this in this chapter, death of a partner. There one theory question is what is intervening period. Maybe asked in board exam. Make sure of it. Yes, then intervening period will be based on the sales during that period, which were calculated as rupees 1 lakh. See, sales for that intervening period only, not for the entire year. They told very clearly during the intervening period will be based on the sales during that period, which were calculated as rupees 1 lakh. The rate of profit during past 3 years had been 10% on sales. See, during the last 3 years, the firm was earning 10% profit on the sales. So we will assume that this year also we have earned 10% profit during the intervening period, and sales of the intervening period only is given. So 1 lakh into 10%, we will get the profit of the intervening period. Then what we have to do? We have to calculate the share of the that is a deceased partner irrespective of his date of death, because the profit part given is only for the intervening period, not for the entire year. So no need of making it to that is a 6 months, 9 months, whatever it is, 2 months. No need of calculating like that. Clear? We'll prepare a working note for that. Then her share in goodwill to be calculated by taking twice the amount of the average profit of the last 3 years less 20%. See, very tricky. The profits of the previous years were 3 years profits were given. Then last adjustment is there. The investments were sold for rupees 16,200 and her executors were paid on. Actually, in this whatever answer is given there, they didn't consider this part. But actually, in practice, whenever there is a sale, there will be profit. Am I correct? It is given as the investments were sold for 16,200 and her executors were paid on. That means, if we consider this adjustment as after her death, she will not get anything from that. If it is done before death, cannot be done, because of course the answer given is correct, because investments were sold after her death. So whatever profit earned after her death, because the value of investment given in the balance sheet is 13,250 and investments were sold for 16,200, there is a profit. So there is a profit. Investments were sold for more amount and this profit should be distributed among the partners actually. If it is retirement, it would have been fine, but it's the death of a partner, so partner is no more. And activity was done after her death to make payment to her executors. So we need not have to consider, give a note in the examination if such a dilemma is there, confusion is there, give a note. It is considered that investments were sold after her death to make payment to her. So the profit earned by selling the investment is not credited to the deceased partner's capital account or executor's account. Write a clear note so that your answer will be correct. Otherwise, there will be confusion. And remember, such confusing items will not be given in board exam. Mostly they will avoid such things. If there is any dilemma, any confusion, or if there are 2 answers or 3 answers, then they will avoid such questions. Better not to give such questions, so that the students will not get confused, isn't it? So that is the actual rule. Whatever it is, we will consider this as done after the death of the partner, and we will not consider the profit earned by selling the investment. Clear? Yes. Now let us calculate goodwill, that is share of profit. Correct. So note number 1, calculation of share of profit of the deceased partner of Bharti, isn't it? Of Bharti. Yes. They told her share of profit for the intervening period will be based on the sales during that period, which were calculated as 1 lakh. So the rate of profit during past 3 years had been 10% on sales. Total sales, right? Calculation of profit of Bharti during intervening period. Total sales during intervening period. Is equal to rupees 1 lakh, isn't it? 1 lakh. Profit on sales is equal to 10%. Therefore, profit earned during intervening period is equal to 1 lakh into 10% is equal to rupees 10,000, right? Therefore, share of Bharti in profit is equal to 10,000 into, what was her share? Bharti HEMA 3:2:1, 2/6, right? 2/6 is equal to rupees how much? 2/6 is equal to 3,333. Round it off. 3,333.33 it comes. Make it as 3,333. Clear? Yes. One note is ready. Now let's move on to the other one. That is goodwill, right? Goodwill. Her share of profits for intervening period is over. Her share in goodwill to be calculated by taking twice the amount of the average profit of last 3 years less 20%. So we have to take average profit of the last 3 years. So goodwill is equal to, right here, goodwill is equal to, note number 2, calculation of goodwill of Bharati, calculation of share of goodwill of Bharati. Goodwill is equal to twice the amount of average profits of the last 3 years. Twice the average profits of the last 3 years minus 20%. This is her share of goodwill. It is not firm's goodwill. Make sure the sentence, her share in goodwill to be calculated by taking twice the amount of the average profit of the last 3 years less 20%. So whatever we get will be her share. Straight away we have to credit it to her. So goodwill, average profit Average profit is equal to, write 3 years average, 14, 15, 15, 16, 16, 17. I am calculating here. See the amounts: 8,200, 4,000, 4,000 and 9,800. 9,800. What's the total? Yes, take the total. It will be 22,000. 22,000, right? This is the total profit. Total profit. Average profit is equal to 22,000 divided by 3, isn't it? So you will get the average profit. Average profit. How much? Whatever you get into 2 times, then you will get 14,666, 14,666.66. I'll make it as 67. Then you have to deduct minus 20%, they told. Minus 20%, right? So it will be 11,733. 733.33. Calculated by taking twice the amount of the average profit of the last 3 years less 20%. The profits of the last previous years is given. So 11,733.33. So we have to calculate on the basis of this. This is the goodwill. So into Bharati's share, how much? 2 by 6. 2 by 6. How much it will come? It will come to 4,889 is equal to rupees 4,889. This is the amount of goodwill of Bharati. This is the goodwill of the firm. Actually, I missed while telling initially. That is, I told it is the share of goodwill of Bharati. No, her share in goodwill to be calculated. By taking the twice the average, we took the average 22,000 divided and we got 14,000 into 2 we made. So we got 14,666.67 minus 20% we have deducted from this. 20% of this. 20% of this we have calculated and ultimately we got 11,733.33. This is the answer. This is the goodwill of the firm into Bharati's share 2 by 6. So it will be 4,889 is the goodwill of Bharati. Now let us prepare ledger account. Here is this. Yes. By whose account we have to prepare? That is Bharati's executors account, right? Bharati's executors account. Executors account. Right, debit credit, particulars JF, amount in rupees, right? Yes. Start by Bharati's capital account. By Bharati's capital account is the starting point. We are preparing executors account. Remember, Bharati's capital account. Write the amount. How much it is? 12,000. 12,000. Then next one is interest on capital. interest on capital account, isn't it? By interest on capital. Interest on capital account. Show the calculations here. 12,000 into 10% for 2 months. 10% for 2 months. So it will come to 200. Then reserve fund. Reserve fund. Calculate her share. 12,000 is there in the balance sheet. 12,000 into her share. How much? 2/6. Is that correct? Write it. 4,000. 4,000. Then profit and loss suspense account. Profit and loss suspense account. Suspense account. Write note number 1. No need to show calculations. Already you have calculated, isn't it? Note number 1. Write the amount 3,333. Then last point, goodwill. By goodwill account. Goodwill account. Note number 2. Note number 2. How much it is? Already calculated, isn't it? So it will be 4,889. Is that correct? 4,889. I think no other entries, no drawings. So calculate how much it is. Is it 14,422? Not 14, it is 24. I'm sorry. 24,422. Yes, that is the answer. 24,422. It is given as 27, but calculation comes to 24,442. So this is the difference. There are no debit entries. 422 to what we should write here? Bharati's executors loan account, right? Yes. Bharati's executors loan account. Transferred balancing figure. Transferred balancing figure. That's all. It's done. Problem is solved. So this is how you have to solve a problem whenever such complication is there. It's not a complication. Simply you have to calculate. That's all. Nothing else, isn't it? A bit looks like confusing. It's not actually. Take assignment problem. Solve problem number 6, that is Puneet, Pankaj and Prakash. Solve it and submit on time. Thank you for watching this video. Thank you.